Hi, my name's Katie and today I'm going to be talking about the ISA. So an ISA stands for an individual savings account, and essentially this enables you to save your money tax-free. So in your everyday standard savings account you have to pay tax on the interest accrued, and similarly in an investment you have to pay tax on the growth that your investment has made, and this includes income tax, capital gains tax, and also a dividends tax if this applies. So there are 4 different types of ISA. You have a cash ISA, a stocks and shares ISA, an innovative finance ISA, and lastly your lifetime ISA too. So you have to be 16 to open the cash ISA and 18 to open up the other 3. I am planning to do a mini series on the different types of ISA as they are all quite different to each other, but in this video I'm just going to be doing a brief overview of the ISA and explaining the allowance. So there are 4 different types of ISA, and you are allowed to own one of each different type of ISA. Now you are technically allowed to own more than one of each type of ISA, but you are only allowed to pay into one of each type of ISA. So 1 cash, 1 stocks and shares, 1 innovative finance, and 1 lifetime ISA as well. So you're only allowed to pay into one of those every tax year. Now there is a way to get around this. If you decide that you don't like the provider that you're with, or you found a better rate, then you are actually allowed to open up a new one and transfer the funds from your old into your new, and then that doesn't count as paying into 2 in the same tax year as you've transferred it over. But please do be aware that you're not allowed to pay into, for example, 2 cash ISAs every year. You're only allowed to choose 1 of each type. Now because this is such a good scheme run by the government, there is actually a maximum cap that you are allowed to pay into these ISAs every year, and at the moment this is £20,000 over the tax year, which is April 6th through to April the 5th the following year. So every tax year you have an allowance, and this is the maximum amount that you are allowed to put across all of your ISAs collectively. Now this is very important. Please don't think that this is £20,000 per each of your ISAs in every category. So for equaling £80,000, it is £20,000 for all of your ISAs collectively. And do be aware that the lifetime ISA has a maximum cap of £4,000. Now obviously £20,000 is a lot of money to be putting in savings every year, and for a lot of people I'm sure this is more than their take-home pay in a year to start with. But if you are lucky enough to be able to put away that amount of money every year, it really just depends on your goals and what you're aiming for and where you would like your money split up. It really just depends on your personal circumstance and the risk that you're willing to take in the stock market and how much you want to be available in cash immediately. Now an important term that I want to bring up, I will talk about this in more detail in my cash ISA video because I think it's more applicable there, but I will just mention it quickly. If you come across the term flexible, what this basically means is that you are able to take money out of your ISA and put it back in without it affecting your allowance. So usually if you take money out, it's too late, you've already used up that money in your allowance, and when you put it back in, you're then using up that same allowance again. So if you're putting in £1,000, then that means you've only got £19,000 left, and then when you take it out, you still only have £19,000 left, even though your ISA is at a 0 balance. But if it is flexible, and you take it back out, you then regain your £20,000 balance back again, and then once you put that 1,000 back in, you'll be back to 19,000. So it's a much more flexible way and stops you worrying about perhaps not being able to access your money and using up your allowance when you didn't want to. Generally you don't get as good rates with this because you are able to access your money freely, and banks give you better rates if it's a locked in ISA, which means you can't access your money. They'll give you a better rate for leaving it there longer term. Okay, that's it for today. I wanted to keep it short and sweet because I know I have a habit of waffling. I hope this has been helpful to you. Please do leave a comment down below if you found it interesting or you learned anything new today. I'd love to know. And please give it a like and click the subscribe button.